Okay. Hmm. Hmm.
Anyway,
Okay.
everybody ready for Thanksgiving weekend?
I'm always ready for a long weekend.
Oh, yeah.
So I'm very thankful for a long weekend as well.
I don't know if I'll have. I don't know if I'll be back in the long weekend. I'm right now in Windsor setting up an Airbnb. It's like a crazy amount of work. Crazy. Basically furnishing a house from top to bottom and renovating it at the same time.
That is a lot of work. That's more than staging. You're really doing the whole bit with the reno as well.
Yeah, I mean, you can't have like empty boxes under a bed sheet, like in staging, right? So it's like actually like actual furniture for people to live on, and like all the like necessities, like dishes and everything, like just like like whatever you would need to like pots and pans, have an air fryer, like all that stuff. So
It's a full house.
it's a full house. Right now, it's full of empty Amazon and Wayfair boxes.
And it's going to be done by the end of the weekend or next week?
I'm hopeful that it'll be done by Thanksgiving. I can come back to Toronto on Tuesday. So,
okay.
What are the rents going for in Windsor?
For long term, like if you have like a 3-bedroom house, nothing fancy, you can probably get about $2,200 plus or minus a couple of hundred depending on the area. And you can get a detached World War II era 1.5-story house for about $400,000 right now. A lot of investors selling their properties in Windsor too.
Oh wow, didn't know that. Why is that?
Why are the investors selling?
Yeah.
Well, the markets that are further outside of the GTA are impacted more by interest rate swings. And at one point, like Windsor was really popular for, people kind of like leveraging and buying real estate and buying like lots of properties, right? So, just like when mortgage rates go up, sometimes people bought at a certain rate, and then it doesn't make sense for them to hold it at that rate anymore. So that's kind of what's happening.
Okay.
Yeah, I'm getting a little bit of a backflow as well for the audio. I don't know if that's from myself, but I guess Michelle, I guess you're good to start. See, you're gonna have a private presentation here, and I'm sure more people are gonna log in a couple of minutes, but we don't want to hold you up and Michelle up any further.
Sure.
You started the recording, Alex? Awesome. Okay, Michelle, the floor is all yours.
Excellent. Well, thanks again for having me, Carmelo and Alex. It's a pleasure to be here. My name is Michelle Newton. I'm a regional manager with CMLS Financial. We are one of the non-bank lenders, so mortgage finance companies. We exist solely to do mortgages, as opposed to banks that have many streams of revenue, streams of income. Banks are big profit centers, so they exist to make money, whereas we exist to provide great mortgage solutions to customers. I'm going to be talking a little bit today about the GTA market. Actually, I've got the August results up here. I apologize. These are actually September's results from the Toronto Regional Real Estate Board. And those came out, actually, I believe this morning. What's really interesting in our market is that you're hearing a lot in the press right now about how prices are dropping and is now a good time to buy, what's really going on in the market. Well, we're very flat in terms of number of sales. We're just a slight bit down month over month, which is not really shocking because we usually do slow down towards the end of the year from our very busy spring and summer months. However, we're at a bit of a low right now because we've been in such a period of high sales. So to say that, we've really dropped in sales, we are down, but we're down from this crazy peak when we had almost 16,000 sales in the month of March 2021 to a much more normal period where we're hovering around the 5,000 mark for number of sales in a month. A bigger story, though, I think would be the selling prices. You are hearing a lot these days about the fact that prices are down. But mostly what you hear in the press is that prices are down across Canada, or when they expect prices to drop, they're expecting prices to drop across Canada again. In the GTA, we have hundreds of thousands of people arriving monthly. People they're migrating from different provinces. We've got immigration numbers are at an all-time high. And the demand for housing could not be higher. We don't have enough housing. We keep hearing that in the news. So I would be very shocked to see prices really come down. You see that, in 2020, we were hovering on this little red line here. Now that we're up here over the $1 million mark, I don't expect that we're really going to come down a lot from it. Because even this fluctuation you see right here, the purple line is where we are in terms of the average sale price right now. We're talking about a difference of not even $100,000 here, because we're talking about from 1.050 to 1.1 million. So really, the difference in pricing from month to month is flat. It's very static. I don't think we're going to go below $1 million again. I would say that this is where we are in terms of values in the GTA. Now, this number here represents all different product types across the GTA. And so that would be single family houses, that would be condos, that would be townhouses, semis, you name it. They're all included in here. You're going to see different results when you start looking at different segments. And I haven't tracked all of the different segments, but prior to starting this call, we're having a discussion about whether or not we're seeing fluctuation in any particular segments, and especially the condo market that both Carmelo and Alex specialize in. Are we seeing any fluctuations in that market? And, Alex and I were having a little bit of an argument where I think that prices are a little bit flat, where he says that prices are going to start to come down. And I think that these are the key points when you're talking to people who know a market very well. I have, broad knowledge from up here, whereas Alex is dealing in condos every single day, talking to investors every single day. So, I think that Alex has a really good point that we probably are going to see more fluctuation in pricing in the condo segment due to the fact that there are so many investors involved in that segment. What are your thoughts on all this, Alex?
Yeah, so thanks, Michelle. Yeah, it was good. It was a good conversation before the call. So, kind of like my thoughts are that there's, the condo, that entry level product that's so heavily investor driven, is going to be the product that's going to have the highest fluctuation. So the homes that are in the 1 million to 1.5 range, they're the fully detached or the freehold properties in general, they're not having such a fluctuation. But for condos, you have a lot of strain of supply, and especially now in September. So the summer months are never really a good indication. Like, we sell around 60% of our real estate in the GTA in the spring, and about 30% is sold in the fall. So basically, you have properties that are coming to completion. So some people that bought pre-construction properties, they're not able to close on those pre-construction properties, not able to qualify for that product anymore. So there's assignment opportunities that are coming to the market. These assignments, by the way, are not on the MLS. So you have to work with an agent that knows where to locate these types of products. At the same time, you have investors who are also, they have tenanted properties, and they're putting these properties to the market because they've renewed their mortgage, and the rent, and that differential between the rent that's coming in, their mortgage and their maintenance fees is just like there's a gap that they can't bridge anymore. Also, when a product comes to the market and it's tenanted, there is if somebody's trying to sell a condo that has tenants living there, you're looking at a better selling opportunity for that buyer, because it's harder to sell a tenanted property. So sometimes the price is even more appealing for that. So you kind of have just the regular resale that we have in the GTA, but also combining the assignments, combining the investor sales. There's a lot of inventory that I'm seeing coming to the market. I'm seeing condos sitting for longer periods of time, and longer days on market. That means better opportunities for buyers.
Great points. That's some really great points there. Though I think that the really interesting part is the completions. There are a lot of new condo completions coming to market right now that the original buyers don't qualify for.
Yep.
You know, when they bought it, the rates were in the 1% and 2% range, and you know, we would have loved for that to have continued forever. But now that it's actually time for them to get that mortgage, we're sitting in really close to 6% on the majority of mortgages.
Yeah.
So that's a really big difference in terms of affordability and in terms of cash flow if it's an investment property.
Yeah, and it can create a really good opportunity for a buyer, right? So like, you know, in the long run, the real estate market continues to appreciate it and will continue to appreciate it in the Greater Toronto area. There's just way too much immigration and too much migration into Toronto. Like, we have a major housing shortage because of, you know, various regulations. I don't want to get into it, but we can't build the inventory that we need to be at the level that we need to today. We're seeing high impact on rent as well. Again, like the second year in a row, this time, like right now, to rent a 1-bedroom condo in downtown Toronto with parking, you'll probably look at about $2,800, where this time last year was $2,500, and before that it was about $2,200, $2,300. So it's taking, like, this is kind of supply and demand. Like, every commodity, you know, real estate goes up, but it's not going to be just like a straight up. There's always bumps in the road. Like, it goes up and down as things kind of level out. And yeah, I mean, so that's kind of what I'm I don't know. That's just like my perspective. That's what I'm seeing for my clients that are buying condos. Yeah.
Yeah, and I think this line is going to continue to go up. You know, these little dips here, you know, that's not indicating that the market's slowing down. It's really the curve that we usually follow in a year. And we haven't had a normal year in a long time, so I don't know if I can really talk about normal years anymore. But the curve that we would normally see is we would see the most sales happen in the spring market, right? So you start out January, February a little slowly, you peak March, April, May, slow down a little bit in the summer months when everyone's on vacation, and then have a little pickup in the fall, slow down towards the end of the year. And we see the prices kind of do the same thing, right? Because they're going to be the highest during those crazy busy months, slowing down a little bit towards the end of the year, and then starting to pick up again. You know,
Yeah.
So really, is there a good time to buy, a better time to buy? I think that the longer you wait, the more chances of this curve going higher. That's my opinion on when the best time to buy is.
Yeah. Yeah. I guess it's when you know, you're happy with the type of property that you can afford, and you can, you know, afford to make payments. And this is you know, like, depending on where you are in the home ownership cycle, whether, like, you know, I think the key thing is that the commodities go up, like, a lot. Like in Toronto, it's really difficult for a first-time buyer to go buy a freehold property. So, you know, it's about getting into the market. It's about taking advantage of that appreciation and that heat, and then, you know, making those transitions and those moves up as you need to. But yeah, that's also like why condos have more turnover, because for a lot of people it is an entry-level product where they plan to stay for, you know, 5 years, and then when they start their family, there's just like a lot of natural turnover. That's why it's more bumpy in the road for condos as opposed to freehold, at least from my experience.
And I think you're definitely going to build equity faster than you're going to save money. So as an investment as well, getting into that condo as a, you know, first level of ownership, that is a great stepping stone to the next level that, you know, could be a townhouse or it could be a single family detached. It depends on how long you hold that property for.
100%. Yeah. Thanks, Michelle.
So, you know, one thing that's really uplifting about the recent TREB numbers is that we are seeing more properties come to market. So, as Alex was saying, you know, you're seeing more things get listed. A really interesting point that we were discussing before the call as well is a lot of people were holding on to properties, maybe thinking they wanted the values to go up a lot more before they wanted to list them. But a lot of those people are getting to the point where they have to renew their mortgages. And they may have been holding on to that property at a 1 or 2% rate, but now it's time to renew into 5, 6, some 6, 7s in some cases, depending on what you're looking at. So that could also represent this influx of properties that maybe it's not a good idea for me to hold this anymore. But if you're looking to buy, this is fantastic news, because this means there's more inventory for people to choose from. Now, another thing, though, that we're seeing is that it's taking less time for a property to sell. Now, 30 days on the market, if you'd asked us a couple of years ago, that's a really long time. But 30 days is not a long time. It really, really isn't in the world of sales. It just has been because we were so insanely busy in this market for the last little while. But more listings means that we're selling, we are selling things faster, which means the market is getting more competitive again. So I think these are very uplifting numbers. All this to say that, rates are higher than we want them to be. Yes, that is definitely a reality. There's inflation. There's a whole bunch of other reasons why that's happening. But I still think it's a very viable market and a very good time to be exploring your options as a purchaser.
So, Michelle, I just want to jump in here with a question. So, as far as the days on market numbers, so why do you think September 22, was is it because there were multiple aggressive interest rate increases in the summer that kind of helped, drove those days on market and made them longer? Because, I mean, you see, when you look at the two graphs, there's a lot less inventory in 2022 than in 23, but the days on market is kind of the other way.
See, I wonder if it has to do with the Bank of Canada increases, because they were happening quite often, as you know, and was there an increase in September? I believe there probably was. So I would imagine that you had a little bit of heartburn from people who just got another interest rate hike and went, "Ooh, I don't know if I'm ready for this right now." So maybe they took a little more time kicking around. I'm speculating, of course.
I kind of remember actually, because last July when the Bank of Canada raised that prime rate by 1%, it was a really big shock to the market.
They never raised it that much, right?
No, last July that's July 2022.
That was
but they never raised it that much
increase.
before.
Yeah, the 1%, it was a shock because everyone at that time was expecting 0.5%. And the fact that the communication was, we're going to continue doing more. So there was a pause. But remember, all the pre-approvals I had, there was a pause with people looking to buy.
Yeah, and I think a lot of the inventory also now that's coming to the market is, like we spoke about a few slides ago, it's investors or maybe just owners. Their mortgage is up for renewal. Is now, maybe they got a 2 or 3 year, or maybe they had a variable, or they're still in a variable, and they're just kind of ready to move on. I don't know. I mean, I guess we can speculate about all this stuff, but the numbers speak for themselves. Yeah.
I think it'd be a good time to buy. So there's more listings. So there's a lot more product available. They're selling faster. So again, like we said, they're heating up. But I think with everything, it's just the more you know, the better decisions you're going to make. Talking to people who know what they're talking about is always a really, really good way to figure out what your next best steps are. And I think I hammer the point home about how it's really important to pick the right team. If you're on your own and you're trying to figure out where the best place to buy a condo is, what are you going to base it on? Are you going to base it on your friend who, really liked that building? Or are you going to ask somebody who deals regularly with investors, knows which properties rent quickly, which buildings aren't renting very well? So that's why I would work with Alex if I was buying my investment condo. And then how are you going to finance that? That's the bigger question, is how do I afford this? What is my best bet? Is it better for me to refinance my home, put more down because this is an investment property? Should I be keeping my mortgage higher? See, that's what Carmelo knows. So you really do have to figure out, what is my goal here and how am I going to get to that goal? And, if you've got a team that can help you get to that goal, you'll probably achieve that faster. So I think last time we talked about just regular products that were out there on the market. Now we're going to talk about second homes as an investment opportunity, because I think that a second home, a lot of people think that means just buying a cottage, but I think a second home can also be a way to, first of all, purchase a second property, but also figure out, do I want to be an investor? Is this something that I'd like to do? Can I carry 2 properties in a bit of a safer way? Because in this case, in a second home, you'd be using it for a member of your family as opposed to an investment. I do have a couple of stories that go with that, that could lead you into the world of investing as you get into the second home market. So on this slide here, I've got 3 very different property types. When I first started talking about second homes, the first thing I always noticed was that people only thought about cottages as a second home. It's got to be a vacation property you're talking about, a recreational property. But it doesn't have to be that. A second home could also be, it could be a condo in the city if you live outside the city. And maybe on a snowy night, you don't want to drive home, so you'd like to be able to stay at your condo in the city. That could very well be your second home. Second home could also be a townhouse that you purchased so that your parents could occupy it. Because maybe your mom and dad are now on a fixed income. They've got RSPs, but RSPs aren't actually income until you start to draw on them. And so that might not be enough to qualify for a mortgage. So we do see a lot of people who will buy a property for their parents to occupy. So they put it in their name. That is an investment property, but it's not a rental because you don't collect rent from your family. Mom and dad may pay the mortgage, but it's not considered rental income when it's a member of the immediate family. So I have one of my favorite ways to use the second home product is I had clients in my old job who, when they had a kid going away to school, they would always promote to their client base, buy a property wherever your child is going to school. Because those university towns, those aren't the Torontos and the Vancouvers necessarily. Yes, there's great universities here as well. But if you had a kid going to Queens, it's much more affordable to buy a property in Kingston than it is to buy in the GTA right now. It's a really great way to purchase a second home. And then the best story was the woman whose daughter went to, she went to Western. So she bought a 2-bedroom condo in London. And for 4 years, her daughter had a roommate. The roommate paid rent, didn't claim it because it was her daughter's home, but that roommate's rent paid a good portion of that mortgage. And then when it came time to graduate, they thought, should we keep this and rent it? Because we've got this great condo here. We know that it's close enough to the university that we could easily rent this out. They decided they didn't want to be landlords because they didn't live in the city. So they sold it. And with the money that they made on that property, they paid off all the student loans. So not only did they have a really great, safe home for their daughter while she was away at university, but they were able to pay off her loans and she graduated debt-free. What a great investment that is.
That's excellent. That's an awesome story. I really like that. How to, like, it's just like another tool, how you can leverage real estate to, help you and exceed, I guess, financial goals. Like, I don't know if they even had that goal going into it. Maybe originally it was just to, have a property for their daughter to occupy, but then you have your family member living there.
Mm-hmm.
They get a roommate that pays off your more, like, yeah, that's an excellent story, Michelle. I love that story.
It's such a good thing, to when you do have customers who are going to school, especially when they're daughters. Condos make a lot of sense because there's a 24-hour concierge. So it's a lot safer when their daughter comes home from the library at 10 o'clock at night. She's not walking through a dark alley to her basement apartment. She's walking to a nice, bright, safe condo. So there's a lot of good in that as an investment opportunity.
Very great. Amazing. Thanks, Michelle.
So the great thing about second homes is it's considered to be owner occupied because it's your home. So even if a member of your family is occupying it, it's still owner occupied. And that's why you can purchase a second home with as little as 5% down. Now, I say as little as 5% down because 5% has always been the minimum down payment. But with government changes throughout the years, it became 5% of the first 500,000 and 10% of any portion beyond 500,000. And that was, for insurable purchases. So if you're putting down less than 20% down payment, which is 20% of the value of the property, you do have to pay a default insurance premium because you're considered to be a higher risk mortgage because you've invested less. So banks are not allowed to lend you money over 80% of the value of your property without this insurance. So buying with 5% down, though, means that it's much easier to get into the market. Obviously, you're going to have a larger mortgage, which means the payments would be higher, but it means less down payment on the front end. In the Carmela, any
No,
questions?
that makes perfect sense because again, this is a second home, Michelle, right? So you don't want to be putting all your eggs in this basket.
Right. And you probably also, bought your first home. There was a big down payment there. So you may not have as much saved up to get into the market on the second one. So being able to buy it with less down is definitely helpful at getting in. So for a second home, it is limited to 1 unit. You can't buy a duplex under the second home program.
Yeah. And one thing that I want to emphasize too about why it may make sense to get a condo for students, like if you have a student that's going to be going to York or U of T or whatever, like into Toronto, like I have some tenants that I work with, and when I work with university students, guess how they have to pay their rent in Toronto in 2023? The whole year up front.
Wow.
So if you're going to be renting, and that's like a standard, that's like with a parent guarantor. So that's just supply and demand, and landlords can get that. So think about it this way, right? Like if your daughter is renting a $2,500 a month condo in downtown Toronto, that's $30,000 of upfront rent that they have to pay. If you were to use that as a down payment towards purchasing a $600,000 condo, that's your down payment.
That's a really fantastic point, Alex. I think you should use that a lot because it's a really good point.
Yeah. I mean, it's unfortunate, but yeah, multiple U of T students that I helped this summer, they had to do the year up front. It's not, I'm not happy about it, but I mean, they weren't even like, they're just like, they know that's what it is.
That's crazy. Yeah. Very good point. So on the second home front, if we're talking about condos, this is not a problem because it is 1 unit. There's no rental income considered on a second home. So to help you qualify for it, you can't claim that income to say, earn this. But don't forget, if you get a 2-bedroom condo, you can definitely rent out a room to help you pay that mortgage. Now, 4-season access wouldn't be a problem on condos, but this would be the case if you were looking at buying a vacation property. And it does have to have residential zoning. A couple more points, and a lot of times you'll hear this called the family plan as well, because that second home doesn't have to be a weekend retreat, but it can be condo in the city, townhouse for parents, or the alternative to residence for the child, as I was discussing earlier. So second homes, I think that is such a great way to dip your foot into the second property pool. And then in that story that we were talking about, let's say after graduation, they did decide to keep the property as a rental. Well, perfect. Now you've got a property already close to university that you can rent out. And I always get the question, well, you bought it as an owner occupied, but now you might have it as a rental. Is that legal to suddenly change your mind and turn your owner occupied property into a rental? Well, of course it is. You own it. And you already satisfied the main purpose of that mortgage. You bought it for a member of your family to occupy. They did. Well, now what's your next step? That next step could be to turn it into a rental, or like in the case of that customer that I had, they decided they wanted to sell it, but many people would keep it and continue renting it on. In some cases, maybe the child continues to live in that property, so it just becomes their permanent residence. Whatever the path forward, it was really the fact that you were able to get into the market in the first place. I think that makes the big difference on it. So again, I think that the second home program or the second home plan is a fantastic opportunity for anyone looking to get into the market.
That's amazing, Michelle. Thanks for sharing, and thanks for adding that second home piece as well. Always a wealth of knowledge and great just perspective, data-driven perspective. So thank you so much for that. So we're going to open it up. If anybody has any questions for Michelle from CMLS, please, you can either share it in the chat, or you can just unmute yourself or raise your hand. So yeah, please let us know. We do have her for a few more moments here. I'm going to turn off the recording because, as always, the questions are not being recorded. So it doesn't look like any questions? Oh, we do. We have a question.
So, Michelle,